Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem the roller coaster ride has started early after President Trump said on Sunday that tariffs of 200 billion of Chinese goods will be increased to 25% on Friday, despite repeated claims by the administration in recent weeks that the trade talks between Beijing and the US were going well. The tariff rate on those goods were originally set at 10%. Trump has initially threatened to increase the tariffs at the start of the year by postponing that decision after China and the US agreed to sit down for further talks. Also, Trump has threatened to impose 25% tariffs on the additional 325 billion of Chinese goods shortly. President Trump said that the trade talks with China are continuing but are moving too slowly as Beijing tries to renegotiate. Tomorrow, the RBA will be looking to announce its benchmark rate. At the moment, the forecast is at 1.25. Without reading too much into the forecast, it is unlikely that the RBA will go. More importantly is what the statement holds, and to see what the central bank is actually thinking. Are they looking for a cut or preferably happy to sit out at the moment? From a technical point, we have challenged the level of 69.4060. It is held after posting a low of 62. If we do get a break beneath there, this will expose the lower region of 68 cents and lower my forecast for this year. Resistance is seen at 70 cents or around 70.25. The euro stays a modest recovery on Friday after the non-farm payrolls number crushed the forecast of 185,000 jobs expected to 263,000. Also to note that the unemployment rate dropped to its lowest level since December 1969 from 3.8 to 3.6. However, the average hourly earnings did miss its forecast of 0.2 from 0.3. Overall, though, the fact is that the euro is attempting to try and recover. I don't see this view. I think the market has further potential to challenge the downside. I still look towards 110.70.85 as a target, where I've outlined in blue, and any advances should fail towards 112.15, with a recent rejection above at 112.55 to 65. So, with all the tension coming back into the market, with President Trump hitting China with more tariffs, dollar yen has crushed through the level of 110.70.80 and posted a low of 110.27 this morning, with a break of 110.70 now exposes a region of 109.45.55. With any rally, I do expect to see fail above 111 with 15 to 55 cap in. I still don't hold a view on the pound after it surged very hard on Friday. The market did get close to 132 before dropping back. As I mentioned, I'd rather sit out at the moment with the pound because it's just too volatile, and the recent descending triangle was negated after breaking through the level of just above 129.80.90. Market still awaits for the top side, and that is at 1,288 to break. If we do clear that level, then we could see further gains, and I do expect this, as short covering is likely to continue with the risks of the situation between the US and China at the moment. Now, a break of 88 would reinstate the upside towards a target of 1,296 to 1,324 as an initial move. Any pullback, I do expect to see the support zone draw demand from 1,255 to 65. Moving back to the oil situation, the fact is the market plummeted this morning on the back of China, of course, and from the gap down, pressures that support at $60 a barrel. This is where I was looking to buy. Keep your stop losses close, because if we do break $60, this could see a move down to 58. So I'd keep about 40 to 50 points under 60 just in case. While intact, we could see a recovery back towards $61 to $64 as a potential target. Well, that wraps up for today. Thank you very much for joining me. Look out for the report, and I hope you enjoy the great start to this new week.